All right, listen up. Steve here. Welcome to The Ledger, your global markets and geopolitical risk report. It is time to wake up and look at the actual tape. Today we're breaking down some serious escalating risks and exactly what the smart money is up to, while, frankly, the retail crowd is getting absolutely slaughtered out there. So let's just dive right into this explainer and pull it apart.
Look, I'm not going to sugarcoat this for you. The peace rally, it is officially dead, period. For weeks now, the market's been running on fumes, right? Just pricing in this calm, orderly, diplomatic resolution. But today, man, equity markets were caught completely flat-footed. We saw a massive, violent squeeze in the energy pits that literally tore right through that complacent narrative. If you were trading on the assumption of global stability today, well, you got run over. Just look at the numbers. The S&P 500 struggled right off the opening bell, couldn't hold that critical 7,200 floor, and closed down 0.41% at 7,200.75. But the real beast today was energy. Brent crude violently leaped almost 6%, closing at a staggering $114.44 off those sudden headlines out of the UAE. Meanwhile, gold is just bleeding out, dropping over 2% toward monthly lows around 45.25. And Bitcoin, it's locked in a brutal knife fight just to hold that 80K psychological support, barely hanging on at 79,966. I mean, the divergence across these assets is just massive right now. All right, moving into Section 1, the smart money and Berkshire's warning. Let's look at what the actual titans of capital are doing with their capital. Greg Abel is sounding a massive alarm in his Q1 report. I want you to let this number sink in for a second. $397 billion. Berkshire Hathaway's cash fortress has hit an absolute record high. Abel is sitting on a literal mountain of dry powder because he's clearly not buying into this tech-heavy market breakout. Actually, in this exact same quarter, they net sold $8.1 billion in stocks. So while retail traders were out there blindly buying the tops, the biggest institutional player in the game was quietly sweeping chips off the table and hoarding cash. What this shows us is defensive posturing on a historic scale. To put that into perspective for you, with nearly $400 billion in the vault, Berkshire executed a tiny, almost irrelevant $234 million in buybacks. That tells you the whole story right there. The smart money is waiting for the geopolitical snap. They're waiting for real volatility to hit so they can step in and buy the blood in the streets when the market inevitably overreacts. Make no mistake, they are positioned for a breakdown, not a breakout.
Which brings us to Section 2, the geopolitical ledger. Project Freedom escalates.
You want to know why Berkshire is hoarding that cash and why crude just ripped 6% in a single session? Because the situation on the water is going south and fast. Let's walk through how Project Freedom is breaking down right now. Step 1. The UAE reported they were targeted today. That is the very first time since the ceasefire began, acting as a direct, kinetic response to the U.S. Navy trying to guide ships through the strait. Step 2. The U.S. military confirmed it sank 6 small boats while trying to set up their enhanced security area. So yeah, that Islamabad peace narrative, officially taking fire. And Step 3, that power plant ultimatum is no longer just a threat, guys. It's the baseline. If commercial traffic isn't flowing by the Tuesday bell, the threat to the Iranian domestic power grid goes entirely back on the clock. So how is the street actually trading this mess? Well, we've got two very distinct, highly polarized camps right now. The bullish view is betting heavily that the Navy's enhanced security effectively breaks the blockade by tomorrow morning. If that plays out, we'd see a massive relief drop in oil, which takes the pressure off equities. But the bearish view? They're betting this UAE strike is just the opening salvo. If this conflict widens and bleeds into U.S. allies in the region, $114 oil is just a warm-up. We'd be staring down the barrel of $150 Brent crude before we even hit the weekend. All right, Section 3, the chart room. Trust the tape. Listen, at the end of the day, headlines will lie to you, but the charts absolutely won't. Notice this violent breakout we experienced today on Brent crude. It pushed up, peaking right near that 115.25 resistance level before finally settling at 114. And you gotta understand, this isn't just an energy story, okay? This is an inflation story. This aggressive spike is exactly what's driving those broad inflation fears across the entire market today. The street is terrified that these energy costs are going to force the Fed to stay hawkish for a lot longer. And that is exactly why you're seeing gold bleed out toward $4,525. Yields go up, gold gets crushed. It really is that simple, and it all starts right here on this crude chart.
Meanwhile, over on the equities side, the S&P 500 is sitting right in the danger zone.
Look at the data here. The index closed resting directly on top of the Aqua 20 simple moving average. I mean, it is clinging to that line by its fingernails right now. If the futures open below 7,190 tonight, mark my words, that record high trend is officially broken. Plus, look at the momentum. The daily RSI is still heavily overextended, so there is zero technical safety net here if that 7,190 floor gives way.
Based on everything we just covered, here is my strict trading directive for you going into tomorrow. Do not, under any circumstances, just blindly buy the dip on the S&P right now. Don't do it. You need to wait for that daily RSI to cool off and pull back toward the 50 line. Until then, you trade with small sizes, you use incredibly tight stops, and you religiously watch your moving averages. Look, this is not a market for heroes. The ledger doesn't wait for latecomers, and the tape is going to show absolutely zero mercy to traders who lack discipline in this kind of geopolitical environment.
I'm going to leave you with one final hard question to ask yourself as you review your portfolio tonight. Think about the data we just went through. If Greg Abel and the smart money at Berkshire are sitting on a record $397 billion, actively taking chips off the table and hoarding cash for a crisis, why on earth are you sitting there fully leveraged at the top of the market? Really think about that. Manage your risk, keep those stops tight, and I will see you right back here at the morning bell. This is Steve, signing off. The ledger is closed for the day.